Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Concentrix Corporation Annual Report. Concentrix Corporation offers a wide range of businesses and services to its clients across various industry verticals. The company provides customer experience (CX) solutions that include CX process optimization, technology innovation, design engineering, front and back office automation, analytics, and business transformation services. Some of the key services offered by Concentrix include customer lifecycle management, CX and user experience strategy and design, data analytics, enterprise intelligence, artificial intelligence readiness, and actionable insights. The company also provides digital operations such as Beatwo billion sales, performance marketing, customer loyalty, trust and safety, collections, and financial compliance. In addition to these services, Concentrix offers digital transformation services that enable efficient customer self-service and build customer loyalty. The company's customer engagement solutions address the entirety of the customer lifecycle, while its AI technology can intelligently act on customer intent to improve customer experience with non-human engagement. Furthermore, Concentrix provides specialized support to specific industry verticals, including technology and consumer electronics, retail, travel and e-commerce, communications and media, banking, financial services and insurance, healthcare, and others. The company's back-office services also support clients in non-customer-facing areas, such as data analysis, language translations, and internal chatbots. Overall, Concentrix Corporation offers a comprehensive suite of businesses and services that cater to the diverse needs of its clients across various industries. Concentrix Corp's stock price has taken a significant hit over the past year, plummeting by 30.93% with a minus 32.1% change in performance. Several key news events and financial reports have contributed to this decline. One major factor was the Q4 2025 earnings report, which revealed a net loss of $1.3 billion for the trailing 12 months ending Q4 2025. This was largely due to a substantial non-cash goodwill impairment charge of $1.52 billion, linked to a decline in the company's stock price during that quarter. Another significant event was the Q3 2025 earnings miss, where Concentrix shares plummeted by 21.8% after its third-quarter earnings failed to meet analyst expectations. Although revenue surpassed guidance, the adjusted EPS of $2.78 fell short of the $2.86 consensus estimate, exacerbating concerns about profitability. Additionally, a goodwill write-down on the Webhelp acquisition was cited as a factor that negatively impacted the stock price, reflecting potential headwinds with merger integration. Ongoing competitive pricing pressures and significant investments in shifting work offshore also contributed to temporary duplicative costs, weighing on the company's margins. These factors have collectively led to Concentrix Corp's stock price decline, highlighting concerns about profitability, operational efficiency, and the challenges of integrating acquired businesses. Concentrix Corporation market capitalization of $2 billion is materially smaller than most of its industry peers of roughly $5 billion. Concentrix Corporation trades at a lower price-to-book ratio of 0.82 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The leverage on the balance sheet appears elevated, with liabilities of 66% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets in equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 3.96%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be categorized into several key areas. On the growth side, strong relationships with global brands, strategic acquisitions, and expansion into new markets are significant contributors. The launch of innovative products such as the Intelligent Experience (IX) suite has also driven revenue growth. Additionally, continued investment in technology, expanding existing client relationships, and selectively pursuing strategic acquisitions have all played a role. On the decline side, impairment charges, decrease in gross profit, and increase in interest expense on securitization facility are notable factors. Termination for convenience clauses in contracts, consolidation among clients, and changing marketplace trends have also contributed to revenue decline. Furthermore, financial challenges faced by clients, fluctuations in use of clients' products and services, and loss of significant client agreements or revenue from top clients have all had a negative impact. It is worth noting that some drivers overlap between growth and decline, such as the impact of global macroeconomic conditions on both revenue growth and decline. Similarly, client concentration risk and accounts receivable balances from a limited number of clients can contribute to both revenue growth and decline, depending on the specific circumstances. The net income of the company underwent significant fluctuations between FY 2014 and FY 2025. Initially, it increased from $1.1 billion to $9.8 billion, indicating a substantial growth in revenue. However, this trend was disrupted by various factors such as unexpected contract terminations, payment of penalties, and failure to receive performance-related bonuses. Additionally, rising wages, mandatory time off, impairment charges on goodwill, higher tax liabilities, and increasing interest rates further contributed to the decline in net income. The profit margins also experienced a decrease from 35.7% to 35%, indicating a slight erosion of profitability. This decline can be attributed to several factors, including loss of significant agreements with large clients, inefficient personnel utilization, higher labor and operating costs, impairment charges on goodwill, and changes in income before taxes due to differing statutory tax rates. The key drivers of change in net income and profit margins were largely driven by client concentration risk, fluctuations in client demand and market trends, termination of contracts for convenience, payment of penalties, and failure to receive performance-related bonuses. These factors highlight the importance of managing client relationships, anticipating demand, and adapting to changing market conditions to maintain stable financial performance. The company has consistently demonstrated a strong ability to generate positive operating cash flow over the past 3 years. According to the financial data, in 2023, the company generated $678,008 in net cash provided by operating activities. This trend continued in 2024 with an increase of $11,516 to $667,492. Notably, the company's performance improved further in 2025, resulting in a significant increase of $139,475 to $806,967. These figures indicate that the company is effectively managing its operations and generating sufficient cash flow to support its growth and development. The company's debt level and interest expenses have undergone significant fluctuations over the years. Notably, there was a substantial increase in interest expense and finance charges from 2023 to 2024, amounting to $31,479. However, this trend reversed in 2025, when interest expenses decreased by 9.8% compared to the previous year. A closer examination of the data reveals that while the debt level increased significantly from 2023 to 2024, it decreased slightly from 2024 to 2025. Furthermore, the interest paid on borrowings saw a substantial increase from $142,598 in 2023 to $299,615 in 2025. These changes indicate a complex and dynamic financial landscape for the company, with varying trends across different periods. Management's outlook on the company is optimistic, with a focus on long-term growth and partnerships. The goal is to be a partner of choice for industry leaders, with an average client tenure of 16 years. This is driven by a growing demand for next-generation CX technology, which will increase the total addressable market. The company plans to grow through innovation, expansion of its suite of integrated solutions, and investment in emerging markets. It also aims to expand relationships with existing clients, pursue strategic acquisitions, and invest in adjacent markets. Management is committed to a diverse and inclusive workplace, prioritizing employee engagement and satisfaction. However, the company faces various risks and challenges, including threats from nation-states, activists, and organized crime, as well as economic downturns, geopolitical tensions, and natural disasters. It also needs to manage risks associated with international operations, intense competition in the CX solutions industry, and rapid changes in business models and technologies. To mitigate these risks, management is investing in technology to keep operations productive and adapting to changing market conditions. The company's success depends on maintaining and investing in technology, as well as managing foreign currency, exchange rates, and scaling resources for expanded operations. Overall, management strategy involves expanding its delivery footprint, enhancing technology solutions, and increasing market share through investments or acquisitions. The company has a long-term outlook on customer relationships and intangible assets, with an average amortization period of 12 years. The company has made several strategic moves through acquisitions and divestitures in recent years. In terms of acquisitions, the company has expanded its presence in certain countries by acquiring a small portion of the team. Additionally, it has made business acquisitions to further grow its operations. A significant development was the combination with Webhelp in September 2023, which marked a major milestone for the company. Furthermore, the acquisition of Marnix Lux SA, Webhelp, on September 25, 2023, for $3,774.8 million has also contributed to the company's growth. On the other hand, the company has also divested certain assets and liabilities through various transactions. These include dispositions made as part of its business operations. The company has also sold trade receivables worth $119,000 and $162,000 to financial institutions in 2025 and 2024, respectively. Moreover, it has disposed of a seller's note, which is another significant divestiture. The company's financial activities have been notable in recent years. One significant development is the payment of dividends, which has been a regular occurrence. According to the provided information, the company has indeed paid dividends, with specific details available on page 30. In addition to dividend payments, the company has also engaged in share buybacks. This strategic move aims to increase shareholder value by reducing the number of outstanding shares. The confirmation of this activity can be found on page 80. That concludes the financial summary for Concentrix Corporation. Feel free to comment below, and I will be happy to answer them when possible.